Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, March 17th, 2024. Happy St. Patrick's Day to everybody out there. And let's get started. Friday was triple witching. We knew it was going to be a volatile day. And we really, we finally saw some selling. And even though we closed down 33, it was down a lot more towards the open, and it touched this important 5100 level, and that's where we saw buyers step in. So really the pattern on the daily chart is going to be this bearish wedge right here, and you can see we're right at the bottom of it. So if the this is what the bears are going to have to get through. It's really going to be that 5100 level. But the more important one is going to be this bull bear line, and that's going to be at the 5151, or right around the 5050, let's say. Because if they lose that, then we're probably going to see a quick move down to the 4972, which would also be closing this gap right here. So if the bears can get through this, then this would probably be the next downside target. And it's also matching up with the 50-day moving average. So my guess is there's going to be, some buyers that are going to be waiting there. If they, if we can, break through the important support levels here. But if they do, this is the next zone that we would be looking for as far as support, and that's going to be right at that 4981 down to the 4940. So this is your important, say the support level that if broken, this is where it's going to be. Now, for the bulls to get themselves out of harm's way, they're really going to have to get price back above the 5150 level. But even before they do that, you can see we have the 5135. That's the 50-day moving average. And look what lines up here, right around that 5060 is that important bull bear line that I just showed you. So you can see we have support, we have the 200-day moving average. So if the bears can break through this, then we are going to, we'll probably see some selling pick up on the downside. And, if that 50-50 come into play, and if they get through that, you can see we have some support right here. Let me just move this line down. So right in this area here is that box support that I was talking about. So this is, if they could get through, that's when I believe that we see some, momentum pick up on the downside. So the short-term range, or say the intermediate term, is going to be where this box is right here. So again, if the bears can push it through this support level, then they're going to come down to the bottom of this range. Now, on on Friday when we were setting up our trades for the credit spread, what we wanted to do is basically just wait for the first hour to play out, and from there figure out our range, go a little bit above, a little bit below, and just set the trades on it. So here you can see we had hang on one second. So here you can see we had some bullish divergences, but we had bearish divergences. So once we came into this level, we got that nice little bounce off of the 5100, and it made it all the way up into the 5125 level before sellers started kicking up. So if the bulls can get above this 5125 level, you can see they're going to be mixed up with this the crossing moving averages. So this is going to work as resistance, and then once you get right above it, we have the 5140. So this is really going to be what the bulls need to get out, get through short term to start reaching up for these levels as far as the next resistance levels. And you can see they're right around that 5150 and up near that 5160. So this is really what they're going to have to get through to get themselves out of harm's way. Now, if the bears can get through this 5100 beforehand, that's when we start looking at the 5090 and then down at the 5080 level. And again, if they break through that, that's where we start looking at a move coming down to the 5060. So oh man, sorry about this. So basically, we don't. You can see right here, we don't really have any buy signals in place here. So if we end up coming up, we're going to get some sell signals. But right now, from what the patterns are looking for, I believe that we're going to see a move down to that 5092 and possibly even coming down to this 5060 next week. Unless the bulls can get it back above these levels, we've seen this time and time again where the bears fail to break through the support levels, and then they gap it up and they're back up at new highs. But this one does seem a little bit different just because of the sincerity of the the selling that went on Thursday and Friday. So I would be kind of thinking the path to least resistance is going to be to the downside until we find that this support level, and then probably just switch over to the buyers. But we just want to keep an eye on the trading range. And for Monday, what we're really going to be looking at is we're just going to move this over and say this is our range right here. Short term is going to be 50.95 up to this up to the 51.80. So this is, say, your intermediate term range. And if we look at a shorter term, you can see that this is the short term. So they really have to get through this resistance at the 59.40. I do believe there will be sellers waiting up here because there's a lot of trapped traders that got caught with this, that really big candle on Friday, the opening down candle. So when we get back up to those levels, what's going to happen is you're going to see, really what's going to happen. Or anybody that bought right here with the belief that we are coming up and breaking through this, these are trapped candles. These are where sellers will be waiting because they were buyers and they got trapped. So anything that comes up here, you can see once we made it into this zone, this is when sellers, kept stepping in. So this is really your wall right here. And once we got into this area, we had some the buyers were stepping in and we came down into the support. So we want to just keep an eye. If the bulls can get above this 51.40, they're going to have to deal with the 51.50 and then back up to at the 50.77. If they can get it through these lows, there's going to be support at the 50.90. So I really wouldn't be chasing the short side down here. I would wait for a bounce and probably come back up and test the 51.35. And now if we get down below this, that's when we start looking for the move to come into the 50.78 level and then possibly even down to this 50.57. So right now, let's just see what plays out tomorrow. I'm going to be identifying the range, obviously, where we're doing, so we could put on our same day the credit spread and really just let things play out. We did pretty good on Friday. It was a fairly easy trade. Again, we just had to wait for the first hour, identify the range, and they never even came close to taking us out on either side, and it was a very relaxed trade. So with that, enjoy your St. Patrick's Day, and I will talk to you guys in the morning.